And welcome back to another video of Coffee and Stocks. If you're new in this channel, please don't forget to drop a like on this video, as well as press that amazing subscribe button. It does go a long way in supporting the channel. Don't forget, we do have huge support from you guys, and without you guys, this channel would be pretty much non-existent. So anyways, we are going to talk about AT&T again, which is receiving such a backlash for its recent dividend cuts, or dividend cuts that they want to do, and the combination of Discovery and Warner Bros. So they kind of received a little bit of correction on that side. So let's get a little bit into it. AT&T did close today at $29.49. It did open up at $29.89, so it kind of traded sideways a little bit. It did trade $2 lower than what it closed yesterday. Pretty sad, actually. Look at this. If you go all the way down here, it's a 12.3% down side, or correction, I guess you would say. A lot of people are not necessarily panic selling, but they are selling because they feel like when that dividend cut does come through, it will shoot down so hard. But that still doesn't mean that AT&T is not a good company. I mean, a lot of people do trade this as an option trading. There is a lot of things that you could do with AT&T. Plus, it is such a really good company overall. It did increase its dividends for a really long time, so you can't really say just because they cut the dividends this time that it's a bad company. Not necessarily. Obviously, everything got affected by the pandemic, and we're currently getting, little by little, we are coming out of that. But don't forget that because it drops so dramatically, you shouldn't buy in. If your average cost of AT&T was higher than $29 or $31, this is a great opportunity for you to buy lower, so you lower your average cost on these shares. I don't own that much AT&Ts, but I did buy a little bit. I think I bought like 2 more because my average cost is like at around $20. So I'm not too affected by this necessarily. Now, one of the things from this article is that AT&T is cutting its dividends and spinning off Warner Media. Obviously, we talked about a little bit about this yesterday. And a lot of people liked that video, so we are going to do another one about it, obviously. So AT&T stock was the biggest loser in the S&P 500 on Tuesday, a day after announcing a mega deal to shed its media assets and focus on its 5G and fiber internet telecom core. The strategy refocus was sent as a positive by investors and analysts, but it comes at the cost of dividend cut after the proposed spinoff closes. So we are going to see more people sell off after that dividend cut, but it doesn't mean that the price of AT&T is going to go lower dramatically. It might even go higher than what it is right now, or what it was a month ago, which was around $32.63. Obviously, today it lost 5%, and then that was from the loss of 2.7% yesterday. So it has gotten quite a bit of frowns, I might say. I still do believe AT&T is a good company, in my opinion. They are focusing and changing the way they do things in the future, and in order to get some more of that money, they are going to cut that dividend. I mean, it's expected, come on. But I do believe AT&T is going to shoot up. Another company that I do want to talk about is the very good food company with the ticker symbol of VRYYF. They only trade in the OTC market, unfortunately, but this does trade for $3.66. Now, it is technically considered a penny stock. It is under the $5 mark, but I mean, I don't currently own some of this, but I do like what they are showcasing. In the past week, it has come down from 330 all the way down from 289 all the way up to 366, which is more than 27% to the upside. You could buy tons of this, right, and watch it explode to the upside. We did have the other company, which was the Impossible Foods or something like Impossible Meats, that started off really high. I mean, this does trade in the OTC for only 366, but I do not doubt that this company can reach higher than $6-7 in no time. One of the things that they did record, say for example right here on April 26, 2021, the Very Good Company reports record result for fourth quarter and fiscal year of 2020. They had a 2020 revenue increase of 364% to 4.6 million compared to the prior year. Adjusted gross profit in 2020 increased 32% compared to the 16% in the fiscal year. So, I mean, they are doing very well for themselves, which this is why I wanted to show to you guys that this is also a perfect opportunity to join into this company. It's quality plant-based meat, just like the Impossible Meats. I mean, they're pretty much doing the same thing. This is the products right here, as you guys can see. I mean, it looks pretty good. I just kind of want to buy some and then go grill, you know. Looks really good, and it's plant-based, so you could be vegan. I don't know, not necessarily. A little bit more about their story is fed up with the overly processed meat alternative available. Our founders knew they could rise the plant-based bar. As trained chefs with multiple years of experience, they set out to make the most delicious and nutritious plant-based meats they could. And in our humble opinion, they nailed it. I mean, okay, they are writing it themselves in their own website, right? So after selling out the market out of the farmers market on Denman Island, BC, our bean butchers knew they were onto something. They brought the magic beans to Victoria and opened the Canadian West Coast first plant-based butchery, a bajillion butcher beans. I don't know if that's their brand. A Dragon Dance appearance, 15 new products, and opening a production facility later, 3 years. And a little butcher shop is online and ready to put some of the very good food on your plate. I mean, I like this company because it's similar to that of the Impossible Foods. Anyways, I think they were gonna come in as a SPAC with 10 billion. I'm not finding them right now, but anyways, I do believe they're similar to the Impossible Foods, which is really awesome. They were valued at 4 billion, then now all of a sudden they got a 10 billion valuation. So that is something similar to what we are seeing with a Very Good food company, which is Very Good Butchers. At 366, it is super cheap to buy. I'm pretty sure in the long run this will explode to the upside. Don't forget also $29.55 for At&T is pretty cheap. I mean, do expect it to drop a little bit more, especially when that dividend cut does come through. So be aware, maybe save your money. Then when that dividend cut comes through and the price drops, you're able to buy that dip. All right, so thank you for staying tuned. Don't forget to drop a like on this video, as well as press that amazing subscribe button. It did go a long way in supporting the channel, and I do thank every single one of you guys. And as always, I will see you guys next time on Coffee and Stocks.